discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet, including the stock market, to be honest, because loaded up for discussion today, we've got the S&P closing over 6,200 for the first time ever, while Trump is calling for Powell replacement and rates at 1%. We'll touch on that, as well as discussing the big news coming out of Robinhood around tokenized stocks and more in a little bit. We'll dive into that headline, and BMNR stock up 700% on news. Tom Lee has become chairman to create a MicroStrategy of ETH. What is going on in the stock market? We've been talking about how we might need to have a little bit of a greater focus on that side of things. We will discuss it today and more. I'm delighted to say we've got Rahim and Stats with me as co-hosts. We are ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. So please proceed with caution and exercise your own judgment. With that out of the way, Rahim, it is Tuesday. It's the 1st of July. How you doing, my man?
GM, I've been good. I've been having a lot of FOMO, ironically, from even permissionless and ETC, just because I feel like these two events are very product specific, and like a lot of people focus on the tech. And obviously, like seeing like the keynote presentation of Robinhood, which just had like a slightly different vibe to it. I kind of had like some FOMO, but it's been awesome. I tweeted out this like last week. I feel like lately I've been struggling to sleep, but I say this in like a positive way because there's just like so much happening, and every day like there's some crazy things happening. So I'm excited for what's happening in this space.
Sounds pretty fun, man. Are you, what's your stance on all of these? Because I was just explaining to someone the other day, like the conference schedule at the moment. It was like, right, and I should have been in New York last week, and now everyone's suddenly in Cannes, and then Singapore is like in a couple of months. Like, how are you looking at it? You're obviously building something very specific in Dubai. Are you like locking in for the rest of the year? Are you going to be trying to network and go places towards the end of the year? What's your stance?
I low-key, it was for the same reason I had FOMO, because I remember the first time I got into the virtual ecosystem is actually having a lot of conversation last Singapore token 2049, and a lot of my personal bets, like I got to know about like SWI because of like certain in real life events. I think events like permissionless ETC are filled with a lot of like valuable information. I definitely did want to go there, but I'm like super busy with everything that I'm building right now with in Dubai. But I had massive FOMO. It is something I want to focus on. Obviously, finding that balance is tricky because you miss out on all the amazing things that are happening in the space, the investment opportunities. But there are like certain conferences I definitely want to always keep an eye on, especially as more institutional, tradfi, and more infrastructure focused we become.
Okay, so maybe towards the end of the year, then that's kind of what I'm thinking. I'm just parking everything for the moment. Like we've got, as I've explained to people, we're doing like this big rebrand, got a bunch of deals to sign over like the next the next month or two, I think. And then hopefully from September onwards, we're like set, and then we can kind of get back out on the road a little bit. That's kind of how I'm thinking about it at the moment. Stats, welcome back with us, my man. Looking looks cool out there, out in the outdoors.
Yeah, you know, we have a house in the Midwest that we come to for a little bit, and right now my sister and her family are inside, and all my kids are inside, so I had to find a room where I wouldn't wake people up.
And the room being the outdoors.
Yeah, is it? Can you hear me though? The noise in the background is not a problem.
It's actually okay. Yeah, I mean, there's a touch in the far background, which I might see if I can do like some noise canceling, but it's basically fine. It compares with one time Brad tried to do the show from outdoor on his travels, and there were just like chickens going around everywhere, making so much noise. So compared to that,
we got a lot of birds chirping. A lot of birds chirping.
Okay, but they were like chickens on top of him as he was trying to do it. I was like, man, go inside.
Yeah, he was in Southeast Asia. He was inside. Sometimes I like call like my bank, and the customer service person's in the Philippines, and you can hear chickens in the background. So I know that.
Yeah, for the live show.
I love the whole setup you have, Stats. Like you have these sun rays coming. This feels like, you know, one of those like interstellar videos where like, you know, Stats is coming from the future and he's like, hey guys, like, I love it. Ooh. It looks beautiful.
It's great. We all need an outdoor setup.
Yeah, I got 2 houses in beautiful places. So, you know, life is good.
Looks pretty nice. Looks pretty nice. Something to aspire towards. We need our outdoor setup, Rahim. Although
Midwest
Dubai
is
might
much
be-
more affordable than Colorado if you're trying to financial.
That's true. The thing I was going to say though, Rahim, it must be boiling for you at the moment. Well, you're not a complainer about the Dubai heat, but honestly, London is hot right now, and
Dude,
obviously
I've been seeing everyone. Yeah, every video
London
I
is not
saw of
built for this.
fans
This is the thing.
is
London's
people
not built
just like
for it.
sitting with fans, and I was like, "What's going on? Like, why is it?" Everyone's complaining in New York. Everyone was complaining about the heat. I was like, "Yeah, everyone escapes the summer, and they're like, Dubai is too hot." But maybe it isn't as much.
Yeah, you guys deal with it well. Right. Let's get into it as usual. We've got a ton of like really interesting stuff to talk about today. Big news coming out of Robinhood. We've been talking a lot about maybe the shift in focus towards stocks. Got a couple of great examples of that from the last 24, 48 hours as well. So let's get into it as usual, starting with the price action, which I'm going to share on screen for people who are watching here. Remember, we do this live. If you're on Spaces, do it live on YouTube and live on Twitter video as well. So starting with the majors, we've got Bitcoin at $106,000, just down 1%. ETH is a $2,400 asset. It always is. That's what it always is. XRP is up 1% to $2.20. BNB is flat at $652. Solana is flat at $149. And our favorite alternative major cryptocurrencies, Hyperliquid, is down 1% to $39. And Sui is down 2% to $2.70. Getting into the meme coin side of things, it was a bit more carnage, I think. A bit more red here. Doge was down a couple of percent. Trump was down 3%. Filecoin was actually flat in the end. Not doing too bad. But SPX was down 10. Pengu is actually reversed. It was down. It's up 3% again. Bonk's down 4%. Looks like single digit red. If I had to be make a bit of a generalization here, single digit red on the memes in general. And getting into the headlines themselves, what we're going to talk about today, we've got the S&P closing over 6,200. Trump is calling for Powell's replacement, also calling for rates at 1%. We've been talking about rates. We've been talking about the DXY really getting hammered at the moment. So we'll get it. We'll go in that direction again. Robinhood announced tokenized stocks and arbitration chain, perp trading and staking. And at the same time, X stocks announced tokenized stocks are now trading live on Solana. Really curious to have that conversation with you guys in a bit, how we view that. And BMNR stock is up 700% on news. Tom Lee's become the chairman of the board to create a micro-strategy of ETH with $250 million. So I think Rahim will be breaking that down, what we need to know towards the end of the show there. Crazy price action on these stocks. On the NFT side, not a huge amount. Some CryptoPunks going as high as 50 ETH, the VR. Tyler Hobbs Fidenza dipping down to 25 ETH, and some other general NFT activity. Getting into the rest of the roundup, Circle applies for US bank license. I think that was pretty big news. Solana ETF is supposedly going live this week, towards the end of this week. Solana ETF by Rex Osprey. This was big news, which I want to touch on in a second in more detail. $300 billion investment advisor Rick Edelman recommends 40% crypto allocation for aggressive investors. He says the 60-40 stock bond allocation model is dead. I want to touch on that more. Inshallah Finance announces $2.1 million raise to address the $4 trillion Islamic finance opportunity. Thought that was interesting. Trump-backed American Bitcoin raises $220 million to buy Bitcoin and mining equipment. And then, maybe unhelpfully for everyone in the world, Elon criticizes debt ceiling again. Trump responds by suggesting he could cut subsidies to Elon's companies again. So we're having a little bit of a back and forth again between America's best entrepreneur and the American president. Nikita Beer joins X as head of product. That's pretty interesting. He's an advisor to Solana as well. Remember, very successful entrepreneur selling very viral apps to big companies. Now he is at X. Okay, that's the roundup. Rahim, before we get into the main stuff today, anything that is catching your attention? We're going to talk S&P after. We're going to talk Robinhood after. We're going to talk about the stock stuff in a bit. Anything catching your attention first?
Yeah, to be honest, I think everything we're going to dive into like details for sure. I think obviously like the stock conversation is going to be like super interesting. The rate cut aspect of 1%, I think that is, I've been like I've been reading about it more and more last night about how risk assets could absolutely explode if that happens. It seems very unlikely because I think 1% is too stupendous for them to kind of push towards. But there's like all this like speculation. You saw like that tweet where they were like, Trump sent a handwritten note to Powell, and that's all that news is. So yeah, I just think like, with a lot of alts and memes whipping recently, I'm assuming there is like some sort of a rate cut priced in July. But yeah, other than that, like I'm looking forward to all the stock conversation for sure, because I have some hot takes on that front.
Very nice. Look forward to those. I think me and you were maybe disagreeing on the timeline in a very polite way yesterday. Okay, Stats. Wanted to ask you, kind of leading into the. I mean, one thing we were talking a lot about yesterday was this chart. It's kind of attached to the rate cut conversation, kind of separate, but the performance of the dollar. Apparently, it's been the worst USD performance since 1973. One thing that we've always been certain of, I think, in this space, if you're bullish Bitcoin, bullish crypto, is that the dollar's going to go down against crypto over a longer time frame. That's why Bitcoin keeps appreciating. But the new paradigm, which I guess people are trying to prepare for, is okay, Bitcoin might go up against the dollar. However, the dollar might be going down against other world currencies. And so how do we, what do we do there? Like, what is the thought process? Like, how do you kind of adjust for that? Because that's not been the case for a long period of time. So just curious for your thoughts here on like, what do you do when the DXY is kind of performing really, really poorly or going down? Any thoughts?
I mean, I think that it's funny how people always project to the future exactly what's happened over the past 3 months.
Yes.
Like it's been the worst. People are saying, what if the dollar continues to go down? I mean,
yeah. And do you have a view on that then? If you think it's a trend that continues, or has it been done and now like, okay, should have done something at the top of the year if you wanted to do something about it, kind of thing?
I mean, I think that this is basically people unwinding the Doge trade. I think there's an idea going in that the Trump administration is going to be fiscally conservative, and I think it's just been that there were other factors that were going to happen where Doge was going to come in. We were going to eliminate the deficit. And I think this is one of the things that has gone the most against expectations since Trump came into office. I have a lot of people in my world are fans of Trump because they thought that it would be a change in fiscal conservatism. If you look at Scott Bessent, when he talks about joining the administration, it was specifically because he wanted to be more fiscally conservative. And I think like Doge basically did not seem to be a huge dent. Spending is something that he's clearly wanting to do. And when it comes to interest rates, I think it's important to be clear. I do not think that Trump is talking about replacing Jerome Powell. I think Jerome Powell will be the Fed chair until May of 2026, but his term is over in May of 2026. So this talk of Trump getting a new Fed chair is about who will come next. It is not about who is going to replace Jerome Powell in the sense of Jerome Powell getting kicked out. And what's important about that is that I think the idea that he would replace Jerome Powell was kind of not really going to happen. Like we thought it might happen. We knew they would fight, but I don't think no one knew if he would actually get kicked out. But that doesn't actually matter because right now markets are pricing in that in less than 11 months, there will be someone new. And that new person will be someone who Donald Trump puts in there. And Donald Trump is a real estate developer who for 2 presidential terms has only talked about low interest rates. He has been tweeting about how important low interest rates are since his first term. He did it constantly. In 2018, I still remember he was yelling at Jerome Powell about how unfair it was that he had 2% interest rates and Obama had 0% interest rates. He was whining about that. So this is something that's very, very important to him. He's gotten very, very good at picking people to do things, to do exactly what he wants. And the markets are basically pricing in that you're essentially going to have Donald Trump as the Fed chair via a proxy of another person who's going to do exactly whatever he wants. And we're going to be entering a very, very loose interest rate environment. I think the biggest driver of currencies are interest rate differentials. People sell currencies of low interest rates and buy currencies of high interest rates. That's what a carry trade is. So people are selling the US dollar, I think, in anticipation of just extremely loose monetary policy. Now, what to do in that? You own assets. You own stuff like Bitcoin. Maybe you own houses because mortgages get cheaper. Maybe you own stocks. And houses haven't done particularly well, but for I think other structural reasons. But Bitcoin obviously is 4% off its all-time highs. Stocks are hitting all-time highs, and the market has really transitioned from worry about kind of world order change on the downside to anticipating extremely loose monetary policy and what turns out to be loose fiscal policy.
I think that really nicely summarizes the way that the market is interpreting all of this messaging coming out. One question though on the underlying health of the US economy, what seems to be confusing to me as someone maybe as an outsider, an outsider literally geographically and an outsider from like the deep economic thinking and of how all of these things are connected, is it seems to be the case that the genuine health of the economy doesn't seem to be a huge factor at the moment. So you might talk about debt being incredibly high and that being really problematic for like the actual workings of the American economy and the people who are maybe getting significantly worse off. And things, it seems like we can simplify this to such an extent where it's just like, okay, well, the rate's coming down, assets are going to rip. Is that the kind of useful framing of this for people?
It was kind of like the opposite of what we're, I mean, 2 months ago, everyone was talking about how Main Street was going to win because Wall Street has been winning forever. And, you know, that's just,
that didn't last long, did it?
We're right back where we started. It's, you know, it's like, right. Yeah. How the economy doing? I think that stock markets are a reflection of interest rate policy at the end of the day. Every time I've made a trade based on something other than thinking, you know, are interest rates going up or down, I have lost money, you know, and as recently as 3 months ago. At the end of the day, though, stock markets go up in anticipation of lower interest rates. And once those interest rates get down to 1% and people start anticipating tightening because it could be inflationary or it could be whatever, that's when stock markets tend to peak. And we've seen that cycle and cycle again, and everything else until now, I think, has been a distraction, which I have in many cases fallen for.
But we're not going to fall for it again.
Do you think then until we have like a change of Pavel and or maybe like however it works in like May 2026, Paul, and in terms of us, in terms of like Doge not working out in the way when it comes to like fiscal spending, do you think this is why the tariff conversation will be an overarching thing for a very long time? Like I believe 4th of July was like one of the deadlines, and we have like no idea, like no one's talking about like what the hell is happening. There was the US and China trade deal, but I'm curious to hear your thoughts, because if like Doge didn't work out the way they wanted, is tariff the overarching cloud that we have for the next couple of months?
I'd say the opposite for 2 reasons. One is it's just very clear at this point that Trump doesn't want tariffs. Like there was about a 2-week period there where people thought maybe Trump cares more about this campaign promise for tariffs than he cares about the markets. When they started saying it's Main Street's term, it's not Wall Street's turn anymore. We're like, there was a period where I think people were like, you know what, like, markets aren't a thing this term. They were last term. This term, he doesn't care. This is a different Donald Trump. And it became clear like 2 weeks later that that's nonsense. That like Trump uses markets as his main benchmark, and that in a world where he cares about that, he's not going to use tariffs to tank the economy. I think the second thing is net. If you actually look at total exports and you look at whatever percentage of tariffs we're talking about here, it doesn't have that huge of an impact on the overall economy, on overall corporate America. Like it's there, but we're not entering this period that we worried about where the numbers are massive, or where the retaliation gets out of hand because people kind of start throwing all caution to the wind. I just think that paradigm's over. So I think the opposite of what you're saying, Raheem, I think we've kind of for the past 2 months just basically had like tariffs are basically smoke and mirrors. It doesn't have a massive impact on the economy, and Trump's not going to use them in the way that he threatened in the beginning. So all these things are just kind of like a joke. And, you know, that's kind of my perception of how the markets are perceiving him right now. And we've just gone from worrying that of fiscal austerity, fiscal tightness, tariffs choking world trade to he's actually not going to be very serious about that. And fiscally, we're going to be super loose. I mean, we're spending millions and tens of millions of dollars on military parades. Like we are not this is not an administration that actually is fiscally conservative. And I think that those are, and in that environment, you got to be in stuff where the money goes, which is assets.
Yeah. Super helpful conversation here. I think, yeah, that's really, really interesting. Tariffs have definitely receded, haven't they? From like
Well, they keep getting delayed. I mean,
Yeah.
there was the term like the taco trade, which Trump always chickens out, you know, and I think it's a silly term, but at the end of the day, but what it the message behind it is like that he's not going to tank the stock market. It's just not that, like, I think this, and to be fair,
stock market supremacy.
And his approval ratings are very correlated with stock market performance. Like I'd say that's kind of the one thing that really drives approval ratings is where the stock market's at. So, and that is a reflection of where. So I don't know. I think the tariff thing has gone from being something we were worried about to something that we're kind of like, this is kind of smoke and mirrors from a market perspective.
Well, you're saying things I like to hear, Sam. We were talking yesterday about, just buying some more Bitcoin, buying some more gold, maybe diversifying into gold, like one of the two or two of the two. Something I'm liking here at the moment. Want to touch on one other thing before we go through the other headlines, because I think this was super interesting. I'm going to share. I'm going to read all of it actually, because this came from Nate Garachi. He's pretty trusted on reporting on these matters. But this is from, let me just check his full name. So Rick Edelman. Rick Edelman founded a $300 billion investment advisory firm called Edelman Financial Engines. Now they have shifted in a big way to begin to recommend crypto. The extent to which they've gone full towards 40% crypto allocation for aggressive investors that you should be allocated towards crypto, 10% conservative. Says owning crypto is no longer a speculative position. Failing to do so is. So just a few points from the writing, which I think is helpful to go through for a second to get the full perspective. He said the traditional 60-40 stock bond allocation model is dead. This is due to unprecedented rates of longevity brought about by remarkable advances in exponential technology. That's point one. Point two, after 39 years in the financial services field, I'm announcing for the first time the correct crypto allocation. Conservative investors should now have a 10% crypto allocation. Moderate clients should place 25% of their portfolio in crypto. And aggressive clients should allocate 40% of their investments to crypto. Owning crypto is no longer a speculative position. Failing to do so is. A passive market-weighted index comprised of all asset classes would have 3% in crypto. So an investor who lacks crypto is now effectively shorting it. Just to explain the thinking further, there's no logic to admitting an asset class has outperformed all others for 15 consecutive years. That's the one I kind of like coming back to when I speak to friends. And I actually personally never really push stuff on anyone anymore. I've given up. I don't want to do it. I don't want them to buy the top, and they only ever get interested past 100K anyway. But I do always ask the question, like, have you looked at the chart? Like, you don't want to own the asset that looks like this. So that's always a compelling one for me. Just look at the chart, guys. The real question he asks is, are you a fiduciary serving your client's best interests, or are you simply an order taker avoiding difficult? Interesting question. Stats, maybe coming back to you here first. Thoughts on this kind of actually quite an aggressive set of advice, and the fact that someone from the successful traditional investment advisory business is kind of coming along for the journey here?
I mean, I think this guy's a crypto guy, right? This is not like the chief economist of Goldman Sachs turning. He's the head of digital assets for his company. So this guy is someone who believes in crypto, who's long been in crypto. So I wouldn't say that this is like some huge shift in this. Like I say, if the chief economist at Goldman Sachs or JP Morgan or Morgan Stanley or the EU, whatever, like made these comments, I think it'd be one thing. But this guy's a crypto guy. He's the head of digital assets for his company. So let's not get too carried away about most of us probably have more than half of our money in crypto based on my surveys of my followers. So I like, for someone within the space to say that, I think is not something that I like throw into this crazy paradigm. But look, it's I think crypto kind of bundling in with gold and saying like, hey, we are in this paradigm right now where just the money printing and the fiscal irresponsibility continues to show that it's kind of structurally fucked in the sense that like politicians are just never incentivized to be fiscally conservative. So therefore these things like alternative assets make more sense. I think it's something that a lot of people, it's part of the logic that I think put a lot of people here into the space. So, bonds have always been kind of a drag on long-term portfolios. I always wonder at what point do stocks like kind of take their beating. 40% crypto, I think I don't love the last sentence, like you're just taking orders, which is why you're not putting people into crypto. I think wealth advisors legitimately don't understand it, find it too volatile, find it too risky of a 30% drawdown, all of things that I think we all know are true. So I don't love that. I think people like to take framings that they don't like and make them seem ridiculous, or blame them on corruption, or you're just taking orders and you're not a real person with real opinions, which the wealth advisors I know who don't put people 40% into crypto are actually looking out for their clients. They just don't like the risk profile or kind of their understanding of crypto. But yeah, I think it's something that probably doesn't strike that apple doesn't fall too far from the tree for most people on these podcasts or in our space. So it's not like a framework that seems that ridiculous. And coming from a guy who's the head of digital assets, it's not as surprising to me as it is to other people.
Yeah. Okay. I think that's fair. Rahim, what is there a perspective here, like in the Middle East, that you get a sense of how people are allocating towards it? It's always been the case that I think Dubai, Abu Dhabi on the sovereign level have allegedly been kind of stacking in general. Is there a perspective here that's coming out of the Middle East that you think this is in line with, or is it diverging from? What do you think?
Yeah, so Bitcoin mining infrastructure companies are like rising, especially in Abu Dhabi. And I think like this kind of points to that, okay, you have your direct exposure through crypto, but now you have a layer of companies that are acquiring Bitcoin for whatever reason, whether it's like tech companies or treasury companies, their stock is going up. But then you have straight up like infrastructure companies that are actually like booming as an industry. So I feel like in some ways it's legitimizing, okay, this is not just like the crypto asset that's going up, but everything that's around it. And I feel like a lot of people, like at one point you're like, okay, maybe I don't understand crypto and I don't think this makes sense. But when you look at the books of, okay, if a company is providing infrastructure ecosystems for Bitcoin mining, when it comes to like climate control, this and that, it's a business, it's a straight up business, and you're like, okay, it's a booming business. It kind of hints to what, like, maybe when internet was in its prime, you had like these data centers and everything kind of absolutely ripping off. So I think like that's been like a big conversation. The Energy Conservation Committee in Abu Dhabi is building Bitcoin farming things. So they're kind of like rolling on this anecdote of trying to conserve energy using solar power to do that, and they've collaborated with a tech company to build out these farms. So I think there's a corporate social responsibility aspects to it that people are seeing. So I feel like this conversation is just going to become like more and more prominent as it's leaking into outside of the crypto specific speculative asset price, but everything around it as well.
Interesting. Yeah, I remember you saying like on the infra side in the Middle East, they're like building out like really quite aggressively, which is interesting to know. Okay. I definitely wanted to talk about those things before we get to the main headlines. I think we kind of talked Trump, we've talked interest rates a bit. Maybe we'll circle back to that at some point. I think the main news of the day or of the last 24 hours was the Robinhood announcement, and then simultaneously like this stock trading that was going on Solana. So I'll get people up to speed with that first, and then very curious to hear your guys' takes on what we're making of Robinhood's entry into I mean, they're already in crypto, but like this bigger announcement. So starting off here, Robinhood's announcement at Cannes yesterday was that they'll be offering tokenized stocks, staking, perp futures, Robinhood chain, and private stock trading on chain. So this is Tyler's thought. They're leaning hard into crypto and blockchain, and are the current leader in blurring the lines between TradFi and crypto. One take on the back of that, kind of very much echoing that. Raul Paul had this to say: it's going to be the end of public and private markets. The end of public and private markets is beginning. So capital formation too is much more efficient in crypto markets. Lending also. So this is the democratization of finance, and it's only going to accelerate from here. It's kind of leaning into this idea that we've been talking about the last few weeks, where we've just been saying that we've been saying like, if you're into memes, pivot to stocks, because the way that these like treasury companies are performing are better than the runners that people are trying to find on Pump Fun or whatever. There's definitely a speculative mania that is kind of bubbling around on the stock market, and it feels like when you're going to house, and we've been thinking this is the vision for Hyperliquid as well, right? The vision for Hyperliquid is going to be the house. What do they say? Housing all of finance. And Robinhood, in a similar vein, whether it's Coinbase, okay, you've got your crypto assets, but you've also got stocks in the same place. So it just makes all of the, but by making all of these things next to each other, I guess the thinking is that we're going to less think in the future, right? I need my crypto exposure by buying this random coin, when you could also be buying the stock that has just been announced as an ETH treasury vehicle, and that's going to 7x, you know? So there's just going to be more competition, in my opinion. A couple of other points. I just want to give some reactions on the timeline before we get into the conversation. OXNGMI, founder of DeFi Llama, said, guys, we've had stocks on chain for years now. This is not necessarily a big deal. But they said what is new is tokenizing private companies. That has not been possible before. People have spoken about OpenAI. People have spoken about Tesla. We actually reported on Republic, which is not on chain, I don't think, but offering these private stocks soon. Lito came up with a decent counter to that, which I thought was helpful. They said we have not had stocks on chain. What we've had for the most part were synthetic stocks like Mirror or Synthetics with really poor UX. The price is often off. There was not good liquidity. Since then, we've only had BackFi, which introduced fully backed stocks around 2 years ago, allowing clients to mint stocks on chain, but there's never been any meaningful liquidity. That was always the problem. This has completely changed now with Sexes going all in and creating consortiums such as XStocksFi powered by BAT. So in that respect, the StockFi offering is different, is meaningfully different. My opinion here was that I think this is actually quite bearish for a lot of coins. I think the competition has just been ramped up aggressively. And if you're not a fantastic asset, then the competition will find you out, right? I think competition brings forth the best and will damage or punish the worst. Just on cost, there was this take from a hyperliquid Max saying that Robinhood's much more expensive. So I am of the opinion that hyperliquid is not necessarily affected by all of this stuff. And then we had, you know, as Robinhood is doing all of we're making their announcements. I'm sure this must have been planned for the Solana alternative to be announced at the same time. Available today on Kraken, Bybit, and being rolled out on Solana. This is the next step for capital markets. StocksFi, allowing you to trade real assets on chain, and people were sharing how you can like now trade on Jupiter and just get stock exposure. Reasonable question coming out of this was, can someone explain how this is legal? A good explain, like, how do you do this? I thought this was always the barrier, right? Like, how do you do this with no KYC? Like, what is the issue here? Kobe had this to reply. He said, I think they are tokenized certificates issued in Liechtenstein. They're closer to CFDs or structured notes than tokenized equities, I think, giving you synthetic economic exposure rather than real equity, which is why
CFDs? What does CFD stand for?
I don't know.
Okay.
I'll double check in a sec. But in essence, I think it's something to do about giving you synthetic economic exposure rather than the real equity. Not sure how they deal with the on-chain part in global access and no KYC though. Like, I still think that's a confusing aspect. I'm not sure what the answer is there. And that's that. That's where we got to. So a lot of stuff happening at the same time. Got Robinhood making their announcements. Got Solana coming back with their kind of on-chain stock trading option. Curious for your thoughts, guys. Maybe coming to you, Rahim, first. What were your headline thoughts on on-chain trading of stocks?
Yeah, I have a bunch of thoughts on this. So I feel like to the argument that a lot of people were making, and I think there's like a lot of value in that about, okay, this is pretty bearish for alts. I'm pretty much on board with that because I feel like, however, I think this takes the riskier assets, so let's say like stuff like memes, actually to a different level. So like the way I would like to explain it is, if you think that people invest in like 3 tiers, so you have your Bitcoin and you're like, okay, you know what, if I'm up on my Bitcoin like 50-60% in the next year, that's a great investment. So you do that with like Bitcoin. And then you have your alts where like stuff like hyperliquid, you're like, okay, if I can do a 4x on that, that's a great investment. And then you have your riskier assets, which is like memes, where you're like, I could do my 10-15x's on that. what I think this does is I do think it's bearish for alts, but I think it increases the disparity of the gains that you can make in the highest riskiest tier, which is your meme tier, compared to alts. Because sure, you can buy your Tesla stock, you can buy OpenAI, and you're like, okay, with Bitcoin, I'm expecting to do a 50%. With Tesla, I'm planning to do a 2x. Then you're like, okay, where is like the most riskiest bet you can take? So I feel like it is bearish to a good degree for a lot of alts, because then you're able to invest in things that are not as risky as alt infrastructure. But I think it does bring a bigger element of, okay, now you realize that those bigger gains can probably be made more on memes or any of the riskier assets we might see in the future. So I think there's like a counterbalance in my view. I think, and this is the argument that we were having yesterday, I do think it's bearish for alts. But you look at the rise of gambling ecosystems, not just in like Web3, but in like Web2. I was in like Malta a couple of months ago, and like Malta is like known to be like massive on gambling, and like their entire economy kind of like runs on it. So I think if anything, this is like bullish for all parties. And going back to something that what 0x and GMI said, that okay, like stocks have been there all along, and the counter argument for that was that they were mirror stocks and they weren't like backed, or they could depeg. Then this begs the question that okay, who are the people who are buying the stocks? Because I don't think the younger generation is like really diving deep into and being like, oh, I can buy the Tesla stock because it's not like 1:1 peg. Like, are these people, do we really believe that people who are buying on chain are people worried about that? So I do think distribution plays a big role, which is what I think Robinhood is absolutely going to kill with this and with StockX, whatever that's called. But I do think it increases the disparity between your riskier assets, which is stuff like memes and gambling ecosystems in the space, and more conservative bets, which is like trading in like stocks through crypto.
Okay, interesting. One of the things part of what you said was an argument I heard yesterday as well. Someone else quote tweeted me. I'm not convinced that young people or more degenerate people like won't buy anything. I think they did start to buy memes because of like specific conditions in the market. One, which was US regulation making it impossible for value to accrue to any of the normal crypto tokens that they had. And then therefore like this kind of backlash against those VC tokens, like, right, let's just run these like fun things up. I think now that we're moving out of that specific environment, which created meme culture and meme trading, sure, I still think things will move and fun. Like right now, Bonk Guy is running up this useless token. It's gone to 200 mil today, something insane. So it will still be possible. But I think there were very specific conditions which made that trading happen and made those coins go to the price that they did. And I think that time is closed, in my opinion. And I think people will buy the things where the number goes up. Like, I think when people catch on to the fact, which we're going to talk about in a bit, right? We're going to go into this ETH treasury company that's just 7x, I think, 700% in the last 24 hours. Like, people realize that's happening. I think young people will buy that because they plus 700% is something that everyone can understand. I don't know if you want to come back on that for a sec. Then
I would just have one question to hear your thoughts on it. Do you believe that crypto casinos are on a rise or will continue to rise? Because I think that's like a good benchmark of us to understand, okay, how riskier people would want to play this game. Because if the argument is that, oh, I do believe that crypto casinos will actually do even better, then there's like a massive appetite for super risky assets like memes. And I know I'm calling them assets. So I think my question would be that to you. Do you believe casinos and crypto casinos in general are on a rise, and will they continue to rise or they will plateau?
I think they are on the rise. I think there's this almost.
You're lucky if you get a stock to go up 2x over the course of a year. You know, I mean, crypto casinos are the chance to 2x your money in 10 seconds. Like, it's just a very different risk profile. And kind of the interesting thing is people in the space are always talking about how, people in the space are always talking about how the returns you can get in this space are completely different from what you can get in traditional finance. People laugh at the fact that, CNBC will go crazy over a stock going up 5% in one day. People are like, that's what my token's doing. I mean, I don't think that differential in terms of risk profile and the moonability of of tokens changes at all, because people can now buy stuff that, goes up 40% over the course of a year in a good year. I actually don't think they're that. I mean, it's the international versus domestic, but any person in the US can buy stocks on Robinhood. It's not like most degens don't have access to stocks. Like, yes, there are people in certain countries that do not have access to stocks. There are people who, for whatever reason, be it tax evasion or otherwise, like to keep money on chain and don't want to touch traditional finance. But a lot of people have access to stocks. Like, it's not like this, like, suddenly, for some people, and I was talking to Tyler about this on FOMO Hour, for some people, it's just not that convenient. Like, I have money on chain. If I want to take that money on chain and buy Tesla stock, that's going to be a bunch of button pushes and a couple taxable transactions or a couple flags to the IRS and stuff I probably don't want to do. So I think, like, there's a convenience factor here. But broadly speaking, it's not like suddenly people who could not buy S&P 500, and there are probably a lot of total wallets like that. I would just argue that the amount of money that's in that boat, I don't know. It's hard to say. But I'm kind of all over the place. But I'll stop talking. Yeah.
I think you're correct in the convenience factor aspect. Like, for me, this would actually make a big deal because this is where I got set up first. Setting up all the other stuff, I've never really been bothered to do. I like right now, specifically because of all the conditions that are happening in the space. It's like one where I do want to get more exposure to the stock market now, even though it's gone higher, but it's like something I want to do. It's part of my investing journey, I guess. And this would be super convenient on a number of levels. So I'm ready for that. And for me, that means that, yes, suddenly, and this was never the case before, all of the random, the more random assets, of course, we've got Bitcoin, we've got some other more core things, but anything else is suddenly in competition with, when these guys are going to tell me that I can maybe get a slice of SpaceX or something like that. So I think it's kind of curious from that perspective.
Yeah, you'll be buying SpaceX at about 12x its NAV though. But whatever.
I know, but then maybe we'll run it up to 25x and then we sell it, right? So I think we're going to start treating this stuff like,
well, just, in that sense, it's a new meme coin. I mean, like,
yeah. But that's actually what I think, Sam. Like, I think, like, the way that these,
like every meme coin, they'll just have boom bust cycles, and then people move on to the next meme coin, because SpaceX trading at 25x is not something that's going to be a good investment for people. Just like most meme coins are not. So it will. In the same
way, when Circle came out at $60, went up to 300, now settling at 180, I think.
Most Circle's not a great example, because buying Circle, well, I mean, look, Circle
went to 300. That was a lot.
I'm thinking more like, if you could have had private access to Circle about a year ago, it's trading at $25, right? So even in that case, I think SpaceX is going to be like 8x NAV. So you would have had to buy it. It'd been the equivalent of buying Circle a year ago for $200. Like, the settlement moment, which is the IPO, would have actually been a negative, even though it boomed on the IPO, because the limited supply versus demand of the amount of shares that are going to be available on these private markets is going to send these things to just massive NAV premiums.
Okay. Yeah. I mean, that's definitely something people are going to have to work out, in the same way that people have to do the calculations on FDV and market cap and who the holders are. Like, you're 110% going to have to check. You can't just buy SpaceX because you like it when it comes onto the market.
Especially for something like SpaceX, which there's no convergence mechanism. There's nothing out there to make it. Like, normally, if something is trading at a huge premium, they'll just issue more supply and it'll get arbitraged back to where it should be. That will not happen with private shares, because they have limited access to private shares. So they're gonna be like, hey, we have 1% of SpaceX. If they're lucky, price. The reality is, it's probably more like we have $20 million of SpaceX, and there's gonna be $500 million of demand in the marketplace. And it's going to be trading at a price that even a boom IPO won't satisfy. Like, that's because the reason I have this strong opinion is because I invested in an ETF that owned SpaceX, that when it went public started trading at 8 times NAV, and that was in the public stock market, because it was what retail's only way at the time to get access to SpaceX. It is still trading at an 8 times premium to NAV, so these premiums can last for a long time. But and what just for people who don't know, what I mean by premium to NAV is, if this ETF owned call it $50 million of SpaceX stock, and the ETF was trading at $1 billion, because so 20 times the value or whatever it is of what actually was owned in SpaceX, because people were like, holy shit, anytime there's good news on SpaceX, they went and bought this ETF, and there was no way to add more stock to offset kind of that differential.
Yeah. So yeah, I think this is super helpful to articulate, because I think we're moving into that universe. People are going to have to, or will have the opportunity to make these decisions in not a long time. Oxy, want to come to you here? Your hand is raised. Curious for your thoughts. Then maybe we'll slide into the ETH conversation, Rahim, unless there's anything else to say on stocks. Oxy, welcome to the stage, my man. What are your thoughts here on the kind of stocks coming on chain, both on the Robinhood side or on the Solana side?
Yeah, thanks. So I guess maybe I might be wrong.
You're very low, Oxy. I don't know if your volume is low.
I'm quiet. You can't hear me super well?
Yeah.
Okay, 1 second. I'll drop down and come back up.
Okay. Okay, let me see if that is better. Oxy, is that good?
Sure. Can we try this again?
Yeah, you're gonna have to be louder. Just be louder.
Okay. So I think, I mean, I might be wrong here, but based on my understanding, like people in African countries or parts of Asia, they can invest in the U.S. stock market, but my understanding is it's like difficult. You have to jump through some hoops. So I think this just opens up the ease of investing in these stocks from a legality perspective. Based on my understanding, you don't have any like rights to the stocks necessarily. You can't exchange them for like tangible stocks. So
correct.
So like I think that's that's the quote unquote loophole here. Just overall thoughts on this though. I think this is actually a really interesting opportunity for people who are crypto and blockchain native, with liquidity pools, and if you understand DeFi. Like right now on Radium, you can earn fees from people trading on-chain assets through StockX or what have you. Like Fidelity and Charles Schwab and Ameritrade, all these companies, they're tens of billions of dollars they're earning in trading fees that are now being transferred to people that provide liquidity in these liquidity pools. So like it's a really interesting way for us to capture this money that these large traditional institutions have been just printing on. And I know, I think there's a really interesting opportunity if you really dig in, understand liquidity pools, understand what's going on the DeFi side. I think there's a huge opportunity to make money here.
I like that. I like that. Stats, did you want to come in?
I got a little distracted, so no, not on that one.
Okay. No, so Oxygen, and for the people who might not have been able to hear properly, like I think that is a really, really unique, interesting opportunity that would not have been possible had it not been for crypto rails and DeFi. Like, so now that these stocks are going to come on chain, you can now participate in the trading fees of that by you yourself providing the liquidity, rather than someone else on the back end of traditional infra kind of making that money. So that is an interesting opportunity. I definitely agree with that. So that might be something you want to look into. Okay, unless there's anything else on the pure stock conversation, I guess we kind of went back and forth there to try to figure out, is this good for the assets, bad for the assets? I think ultimately it's good for the space, and present some unique opportunities like the one Oxy just described. But getting into maybe this final headline now, ETH strategy, another ETH strategy. Rahim, what do we need to know? Some interesting stock market price action based on someone trying to buy all of our ETH bags, or whatever's left of them. What do we need to know?
Yeah, so there's this company in US in Vegas called wait, what is it called? I need to see this again. Bitmine immersion technology, and essentially what they focus on is something very similar to what I was talking about that they're focusing on in Abu Dhabi. So they're focused on infrastructure. They provide like cooling ecosystems. They mine Bitcoin themselves, but their bigger business model has been to provide hardware equipment for other people to do it. So they are like a third-party solution. They basically had Tom Lee join them as their chairman who has run like private equity funds before, and he's like one of the people behind Fundstrat fund. He basically joined as their chairman, and it coincided with them buying about $250 million worth of ETH. They kind of coincided all together, and there was like an interview done by Thomas Lee where he was essentially talking about that you have so many people. If you have JP Morgan or Morgan Stanley and all of these people are trying to build like infrastructure, and they want to issue their own like stable coins, they will be building on ETH. And he's known to kind of like start Bitcoin mining, start investing in infrastructure technologies in early years of crypto. So him coming in chairman for this company that's essentially Bitcoin focused since 2019, came in and acquired about $250 million. It's pretty crazy. It's noteworthy to point they also don't hold a ridiculous amount of like Bitcoin. They did like recently a stock offering where they acquired about 155,000 Bitcoin, so it was around like 16-20 million. But like, yeah, like they're really going heavy on ETH because they believe that a lot of infrastructure from institutions will be built on ETH. And yeah, that's his bull case for being the ETH MicroStrategy for this cycle.
I like it. Thanks for the summary. And just to crystallize the argument there, it was very much an argument of like security. I've talked about this argument before. I find it kind of compelling, which is, and this is the logic that you have to follow to think it makes sense, is like the banks, you have to believe stablecoins are amazing. Stablecoins are going to be everywhere. Stablecoins are on ETH. And if all of those things are true, then banks will acquire and stake ETH to make sure that their stablecoins are safe. Like that is the line of thinking that he is taking in order to try and establish this ETH buying machine. Just in terms of the stock price, Bitmine Immersion Technologies up 700% yesterday. It's insane. Is that right? No.
Yes, they went up 6x.
Went up.
But you got to understand what that means. Like this was a non-existent company.
Yeah.
Right? It was $30 million. You know, it's not nothing, but you know, again, I think these moves are insane. But it was basically a non-existent shell company that they came in and said, this is no longer a non-existent company. This is a very high-profile company that was going to be in all the headlines. That's going to trade at a premium that we're going to buy a ton of Ethereum for. So it's you know, I think that initial day percentage change can, you know, for people who, for whatever reason, insider or otherwise, owned these things, it's life-changing, but it's not like something that you or I would have been out there buying 3 days ago. You know,
sure.
Yeah, without insider information.
So what this is an anonymous, unidentified contract address just sitting there. There's a few holders.
Exactly. Suddenly Kobe's injecting a new podcast and token into that CA.
Got it. I'm just looking at the timings though, because it actually presents, this is what we're thinking, right? Trying to capture some opportunity potentially here with the trading hat on. Obviously trying to understand like the bigger trend here, have an intelligent conversation about it. But with my trading hat on, this started to move in the morning yesterday. I don't know what time zone. I think I'm on European time zone here. Say, you know, it started to move and it went to like, I don't know, 10, 13, 14, $15 in the morning. And then by the end of the day, it doubled up. So like there's kind of time with these things. It feels like, because this has happened a couple of times now where there is time for the announcements to come out, for you to digest it. It's not like, and actually this is conversely, when you have meme coins, sometimes things go so crazy so fast because all the things like pile on top and no one wants to buy that chart. That is not what I'm seeing in these type of announcements, is what I'm saying. So I think that is interesting to see. I'm showing the chart for the people who are watching in as well, if that's helpful, but I hope that accurately described it. And then, so that's...
Do you think, would you say then, obviously, clearly, just going back to what Stats was saying, there's no way we would be like sitting on owning the stocks because no one knows this is going to happen. And yes, you have opportunities like Plasma, and here and there we have like stablecoin exposure. But just like listening to this thesis of so many people focused on stablecoins, do you think a lot of people are just underexposed with or not valuing ETH price action? Isn't like ETH the only available play? And I know I know
Until
it's been like the most stable asset, but like, do you fundamentally believe the
ETH is a
thesis
stable
of
coin. Stats, you hate stablecoins, so you must hate ETH now as well, right?
I don't hate stable coins. I don't hate. I own a lot of stable coins. I think stable coins are great for yield farming in a way that it's hard to do with actual US dollars. I personally love stable coins.
Okay, but then what about the follow-on question? Like, look, the thing that I have got tired with is look, I love ETH's outlook. I love the vision. I loved all of the things about it for a long time. But for me, it fell short of being able to translate all of those nice things that you wanted to say about it into, value accruing back to the token. So I guess the question then starts is, okay, you do love stablecoins. You admit that you love stablecoins. Do you also think that this thesis that Tom Lee is sharing, which is everyone's going to have stablecoins, banks love stablecoins, and they need to secure the network, that's one of the most compelling arguments to me. It's not really being reflected in the price as such, but like, do you like that argument at least?
I think at the end of the day, these things, I think it's very hard. I have not had anyone present to me a fundamental, like, cash-based like valuation for ETH or for most of the major coins. So it's hard for me to be like, oh, because of all these stable coins, there's gonna be all this demand for ETH, and they're gonna need to stabilize the network, and that's gonna justify a $250 billion valuation. It really should be $500 billion. I still think these are meme coins at their core. Like, are they hot? Are they culturally on? So it's hard for me to get too excited about something like that, in the sense that I don't think that's actually what drives price. I think it's kind of like branding and narrative, and so and it feels a little bit like too technical of a narrative to be something that captures. For these things to do well, you need billions and billions of buy dollars. So this trend of treasury companies, that's billions of dollars. Like, that is something I think is moving price. A narrative of stable coins, and like, to me, that it just doesn't feel like very smart people like DC Investor and Raoul Paul and I think 6529 talk about these things. So I just don't have my head around them enough from a fundamental valuation perspective to say like that's actually the price driver. I think it's more that's the narrative driver. Narrative drives price, and it doesn't strike me as a narrative that actually has massive buy power behind it.
I would also say,
filter, though. I just threw that filter on. I got a little younger. What's up?
There you go.
I
People
think
are
you're spot
noticing.
on the. I think you're spot on the narrative side of things. I think the narrative for ETH for so long has been just like this L2 and L3 rollups that we've seen. So I feel like this stablecoin narrative is also like a relatively new like, yeah, I know it's been around and like it's not like stablecoins are new, but I feel like it's only recently you have so many micro strategies of ETH or so many like stablecoin infrastructures. I don't think 3-4 months ago everyone was talking about it at the same scale. So yeah, I mean, just to play the devil's advocate, maybe we are at the brink of changing that narrative, because clearly like the whole L2 narrative that we had didn't bring the value accrual to L1.
There's no question that stable coins are hot right now in terms of narrative, and there's no question that this is something that the world of crypto is focused on. The only thing I'm questioning is crypto, like stable coins are hot. Look at Circle Stock, etc. We got to buy Ethereum. That last arrow. Let's add billions of dollars to Ethereum's market cap. That last arrow is one that I think is a tougher narrative because it's confusing.
Yeah, that's why I like thinking of it. This is not a bet I'm currently making at the moment, but if I had to make the bet, the thing was like, well, I like the idea that you're securing the value. It's a security budget almost. You spend a ton on defense. Okay, well, you spend a ton on securing all these digital dollars that are super important. Like, I really like that argument, and I think it's a good argument to make. Although I'll wait before I see it actually translate into any kind of positive price action, because that's what I'm not seeing from ETH at the moment. Although I think it's doing a great job housing all of this money. Okay, guys, that was a good show. I enjoyed it. As usual, thank you so much for joining us. Thanks to my co-hosts, Rahim and Stats. Thanks to all the YouTube commenters providing us with all kinds of helpful live information on what CFDs are. Thanks to the Twitter commenters explaining what they're doing on LPing, Tesla, on Radium, Oyster. I see you there. Thanks for that. Thanks Irresponsibly Wrong on Twitter as well. Super helpful. Always great to have smart, intelligent listeners going along with us. As usual, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X Video, YouTube, and you can catch us on Apple and Spotify too. Have a wonderful day. Take care. We will see you same time, same place tomorrow. Bye-bye.